Hey everyone, this is Julian with Behind Company Line. Today we are interviewing Maik Wehmeyer, CEO and co-founder of Taktile, a global automated decision platform that is revolutionizing how fintechs harness data to steer their business. Mike, I'm so interested in chatting with you today and excited to not only learn about your background as a founder, but also Taktile and how you're just helping. I was going through the product and it seems like they're using data in a really sophisticated way to not only capture a bunch of variables, but also to give that insight intelligently to businesses. And it seems like even more so, not even after the pandemic, but in more recent events of not only this year, but late last year, it's becoming more and more imperative for companies to be very strategic about the moves that they make, the decisions that they make, and also the communication and the speed at which they make those. So really interested to hear your insights and get more into the weeds of Taktile and what you're doing and who you're helping. But before we get into all that, what were you doing before you started the company?
Awesome. Julian, thanks for having me on the show. Very excited to deep dive on what you do at Taktile and how data actually is being used nowadays in the world to make better decisions.
Yeah.
So what was I doing before Taktile? So actually started pretty early, 2016. I was still in grad school and doing research on machine learning models and big data. It was just at the very early times of data science. There were hardly any data scientists out there. But also where I met my co-founder, Max. He was getting his PhD, doing something very similar. And we thought we want to try out how machine learning actually works in the wild. There were hardly any use cases, hardly any people who tried it out. So we started to approach big corporate, big banks, big insurance companies and asked them, hey, can you give us like some of your data? And we will then potentially figure something cool out and we'll want to show you on how these novel statistical methods, these novel machine learning methods actually potentially could bring you some business value. So that's actually what happened in the beginning. We went out and started to build models. And then we're doing that. We're doing that for 3 years, building up with a bunch of other fellows from uni, building up this machine learning consultancy.
Yeah.
And then it was 2020 and we started Taktile.
And the incredible to think about the fact that businesses are using data now that it's so commonplace for any business to have some data component at any part, understanding it, collecting it, and also making decisions based off of it. When you were first going out there talking to companies, where did you start with the data? Were you categorizing it and then just kind of built models to make prediction? Describe a little bit of the mechanics when you have a big data set. How do you start labeling it? How do you start identifying what your key signals are to start extracting important bits of information? What is the process like to do that? And when you were first going out?
Yeah, it's a great question. And a lot about data is you don't know exactly what's in the data and no one can tell you before. So you have to start digging and you have to start experimenting. And then you slowly start to figure out actually what's going on. And it's a little bit like research. You need to understand what's deeply in the data. And the way we did it most of the times we were starting to run very structured experiments. We were trying out stuff. You have like fast iteration on certain like hypotheses that we had on what we wanted to figure out. And by running these experiments, you start getting signals on the potential value in the data.
Yeah.
Kind of like that. Maybe some examples you've probably heard before. Think about pricing, dynamic pricing, risk adjustment. Prices aren't always the same. They change all the time. And they do change it maybe looks very unstructured to the outside user, but in the end, it's a very structured process behind by algorithms trying out different with prices or price structures. And by doing that, you can really, really narrowly measure on actually what changes of the algorithm would have what change on a user perspective, on conversion rates, on price elasticities, and so on and so forth. And that's pretty much the approach we were running.
Yeah, I can imagine that the data is not always clean though. And what do you do in the sense when a data or you're missing components of data? Do you just kind of put some kind of, I guess, like a variable that kind of sits in its place, or what do you do in particular to make sure that the model doesn't get broken when you're working with a big data set and if you have missing components to it?
Yeah. So one thing every person who's worked with data has realized: real world data is always very messy. It's not a Kaggle challenge where you get a well-structured and nicely set up data set, and you can start running your models on it. Real world data is always messy, and it's a big pain to clean it up. So, that's part of the work. That's part of the work. But I think apart from only like cleaning up the data set, the very interesting piece and also kind of like the insight that we then got over these years was what is actually the right infrastructure to do that on. Because you can do something in your notebook and you can try to do something very manually, but in the end, most teams want to actually control their decision flows on their own and want to do all of that on their own. And that's kind of like also like kind of the interesting path of like trying out building machine learning models for other companies. At some point in time, two things that we figured out, and the one was they actually want to own all of the models themselves. Like if you go to a bank, if you go to an insurance company, and you're thinking of risk models, that's the heart. It's like so deeply important, also from a regulatory perspective, but also from a business perspective, that you own these models. And then the second thing is that a lot of the work in the end, when you build models and if you think about decision flows, if you think about decision logic, goes actually into building the infrastructure that you can start experimenting and iterating very fast. Kind of like you give the tools and the shovels to people that they can actually start running on their own. And kind of like that's what actually led us then to also start the company in 2020, because we saw how much value could be created by delivering this infrastructure to then internal risk teams, data science teams, business teams that actually are responsible for designing these flows nowadays.
It's incredible to think about the whole transition to it's either no code or low code types of platforms, and are looking at the talkative. It seems like there's this interesting, I don't know if it's it's like a composition of not only software, but also enabling teams internally at other clients to be able to use that software. Now, when you're making this relationship and you're building these relationships with these companies, how much is involved in the onboarding process, being that you've minimized and ensured such a infrastructure foundational level on the code side, but also they need to build sophisticated models on top of that. What's the onboarding process and what's the learning curve look like for a lot of these companies who are implementing talkative to start giving them insights into their business and start to kind of help their decision making at Taktile?
Yeah, it's very interesting. I mean, like I would kind of like separate between two types of users there. The one is the teams that have been working on models and on decision flows for quite some years, more like the very existing, very sophisticated players. And then they're the younger companies. They're just starting out. It's a young fintech. They want to launch a credit card for immigrants in the United States, and they're just kicking off the tires. And if you talk about the first category, it's always quite a lift and shift. Like if you what I said earlier, if you rip out the heart of a bank or an insurance company, it is quite some work actually to get the decision flows onto a platform like ours. And on the other hand, if you're just starting out, then the onboarding process is actually quite fast. Yeah. But what we do is we actually have some templates for these companies to start out and running from the beginning. And then instead of them trying to define their first credit policy over a period of 12 months, they then can do it in 3 to 4 weeks because a lot of the things are already there. The infrastructure is there and the flow is already there as well.
Yeah. Why fintech in particular, when I'm assuming, and I think a lot of us now assume that data is pretty much just a collection of variables, and building these models is actually building hypotheses on top of that to then either validate or invalidate them based on some kind of assumption. Why fintech? What in particular got you excited about this industry and this in particular versus expanding it to another horizon? I'm sure maybe there's some plans to do so, being that low code platforms are just, I think they're really kind of the next step as the front end became kind of like Webflow and all these frameworks and structures, back end technology is now doing that with Bubble and on all these no code platforms. But why fintech? What in particular was exciting about this industry in particular?
Yeah, I'd say, first of all, financial services is a beautiful industry for data. Banks and insurance companies, they've been gathering and storing data in a structured format since decades. Yeah. Contrast to many other industries, they're just now starting to realize what you can do with data. But the backbone of a bank and insurance company is using data to make more informed and better decisions. They start to segment risk in a more precise manner in order to make a good margin. So that's really general what financial services is super compelling about. And then when we started Taktile beginning of 2020, all these neobanks came also up. The full industry of fintechs coming up, not only in the US, but also in Germany, in France, in like Africa. We have a bunch of customers in Africa, in India, and a lot of there was a full new industry coming up. And if a new industry comes up, these people also need software. So kind of we were then starting and approaching the market from one product perspective, where actually is our software very useful, and then also where is the world growing into a very interesting customer base. And that's definitely happened in the fintech space in the beginning of 2020.
Yeah. And what were people doing before Taktile, before they were understanding and building, whether it's policies or other things based on the data and what they were seeing historically for themselves, but also within the market and kind of the broader landscape? What were they doing before they had something like Taktile?
So our, let's say, biggest competition is build your own. And so normally people start building something on their own. And I mean, that's exactly also what we saw when we were doing models for these companies over years before we started Taktile, was that there was no real good infrastructure out there. And that's what people always led to building something in-house. And that normally looked like someone, the domain expert, the credit analyst, the actuary, the underwriter, she put something in Excel, the rules. If you're a student, you're not going to get a credit card. If you're below 18 years old, you're not going to get a credit card. And that's then being sent to the backend team, to the IT team, to the engineers, and they then hard coded somewhere in the backend. And now you have a problem, because what you also asked earlier, what we talked about, making good decisions, it's about iterating, it's about experimenting. And if that transition between the people who actually want to make the decisions and until it ends up in the real world takes a couple of weeks and is very rigid, you cannot experiment. You kind of you're dancing in chain. You actually want to, interest rates go up and you want to change something and you have to call IT. No, we don't have time for you for the next 6 weeks and you cannot change it. And then you've changed, you put something live and maybe it was not the right thing to do what you expected that it would do. And then you have to correct it as fast as possible, but you cannot do that. And that's exactly what our low-code decisioning platform is actually doing. It helps these teams to just iterate faster without being blocked by engineering.
Yeah. And what are some of the things that you would see companies iterate on? Is it changing internal policies, allowing, you mentioned something about not letting certain type of lenders, say, borrow from that institution, but what kind of iterations are they having to make as they kind of look at the broader market or themselves internally? What do you see that are common that companies need to iterate on and move quickly with?
Yeah. I mean, great use cases, everything around risk judgment, credit underwriting. And why is that? Also, one reason why we picked fintech is because I deeply believe into the value of fintechs being founded and them making better decisions, because they have new data and they can harness the data in a more precise manner. For example, when we raised our Series A, $20 million, that was quite some money in the bank account, and we wanted to get leasing bikes for our employees. And then we applied and we got rejected because our, let's say, our Dun & Bradstreet score was just outdated. They use a very old mechanism of making these decisions. We were rejected. I was like, hey, we have 20 million of cash in the bank and we would just want 5 bikes. I think that should be possible. And they said no, it's not possible. You cannot get it. And then because they just don't use the data which is available out there. And then they are young companies. And back to your question, the use cases there, Moss, for example, is one of our customers. It's a very successful B2B challenger bank from Berlin, expanding now different countries in Europe. And they use banking transactions in order to make underwriting decisions. And that's beautiful because it's not a rigid old score, but it's actually, they look at what comes in, they look at what goes out. And in our case, there was a $20 million funding round. We're not spending that much money. And of course, they gave us a good score. And that's in the end how you can make better decisions. So I think there are a lot of these very, very interesting examples how financial inclusion is being enabled by fintechs because they can now have access to novel data sources and because They're using modern decisioning approaches that allow them to really use the data and make good decisions.
Yeah. It's interesting. It also gives me a little bit of a PTSD from when I was applying for apartments, and they had to review my income from the last few months. In New York in particular, they're a little stringent on that, though. A little bit of shock there. But no, in regards to like this whole neobank, all these neobanks that are coming live and are able to access different parts of the population, whether it's because of, like you said, more up-to-date underwriting, or they have a little bit more of an insight. How does that change the overall, not even just lending market, but all the financial institutions in general, when they're able to make not only more intelligent decisions, but quicker decisions and allow access to different sections of the population that may have been, or for one particular reason or another? How does this change the landscape of whether it's lending or risk as these companies build these new models and start to understand more about the intricacies of not only decision-making, but population and where you can take a little bit more risk than you were traditionally? How does that change? How has that changed in the last 3 years? But how does that change in the near future?
It's very interesting because, I mean, the market is just being segmented into much smaller population.
Oh.
And by kind of like new companies coming up and they have a hypothesis and they say, well, I deeply believe an immigrant like me coming from Germany, moving to New York, should that person actually get an apartment? Should that person get a credit card? And they think, yes, we think, yeah, Mike should get a credit card because we have a way on how to evaluate him in a more precise manner. And I think that will win a lot of market share for the types of personas I am. And the same example goes on and for SMB lending, for auto lending. And that's only the US. If you look at kind of like other customers of ours in Africa, we have a couple of customers in Nigeria. It's very interesting. And there was hardly any financial institution that served certain parts of the population before. There's no access to finance. And by allowing using, for example, phone data, if the people allow the new banks to use them, if you look at banking transactions, you can really segment the market in a way which wasn't done before. So I do believe that there is, and it's also very much proven by the numbers, that there's quite a big influx of customers to the neobank away from the bigger institutions. But now it's on the neobanks to also prove that they can build a profitable business. But that I see very good numbers at many of them.
Yeah. It's impressive to think about how much what institution or future lender or what have you, how much they know about their population. It's interesting to think about the little intricacy, whether it's considering someone's background, if they're transitioning from another country to another one as well, but even in more, not decentralized places, but places where there's less centralized infrastructure, how they can really underwrite, keeping track of other pieces of information that they know about the population that they can make predictions on. That's incredibly impressive to think about the level of access people will get. And I'm curious to learn more about Taktile in the sense that tell us a little bit more about your traction. How many companies are you working with? How many people have you been able to, how impressive has your model gotten? What's the traction that you've seen recently? And what are you particularly excited about in this coming year and so on?
Yes. So, I mean, we started in 2020, rented the Y Combinator summer 20, and then launched the software beginning of 2021. You know, back to ripping out the heart of a company. You better make sure you've built something very robust and stable before you actually allow someone to actually run on your software. And the traction has been absolutely fantastic. Since we raised Series A mid last year, we saw a 300% increase in revenue, 4x of our customer base grow. We have customers now in consumer, which is about 50% of the business, B2B, the other part, it's use cases, buy now, pay later. It's a lot about working capital. We do have insurance companies on the platform by now using the software for their pricing infrastructure. So it's enormous to see how traction lately picked up in so many different kind of like use cases on the platform, because it just kind of like for me shows more that the world is run more on automated decisions, but it just didn't have the infrastructure to really work with this uncertainty out there in the market. And we try to make these teams develop a better relationship to uncertainty. And we just see how actually, like, if you can really enable these people by having the structured no-code, low-code environment, it picks very well up. So that's great. That's where we are right now. And now going forward, how the game goes. It's about growing fast. At the moment for us, it's interesting because it's very, very clear that the product is objectively better than everything which is out there. And now for me, it's about how can we, in the most efficient way, get adoption on the product, which is for our case, going up market. So we're now starting to sell to much bigger institutions. But it's not only fintech more, it's now the big incumbents. And that's a different animal. And that's going to be back to your question in terms of goals for this year. It's about whale hunting and going up market as fast as possible.
Yeah. And why up market and not expand to other industries?
We're discussing that. We're still discussing that, and defining and increasing your degree of product market fit is, again, a constant experimentation. But we feel very, very much home in the financial service industry, and we've proven how much value can be generated in terms of additional profitability with our software. Yeah. And, going then from a big fintech to a mid-market bank to an incumbent bank, it's actually very, very, very close and similar.
Yeah.
If I think about P and the F, there's a product and there's the market, and it just fits so well together for us at the moment. Moving up there works quite well. If you now go to use it for telco pricing or e-commerce pricing, it's a different market.
Yeah.
I could well see how by the time of IPO, there will be potentially use cases in these industries. But for the moment, we want to be laser focused on financial services and keep closing more customers there for the moment.
Yeah. And thinking about whether it's, obviously we have a lot of macro, I don't want to say issues, but concerns in the general public about not only the economy, but also what that means in terms of transitioning from whether it's fiat to crypto. There's all this talk and all this conversation about not only how you can get money, but where that money is going to be distributed and how it's going to circulate within, at least for the US, our economy in particular. And I know other countries are dealing with changes to their infrastructure as well. What does that mean in terms of the risks that you see a Taktile having? Is it, I'll just leave it there. What are some of the biggest risks that your company faces moving forward?
Yeah, great question. And I think there's always risk on a young company like ours. There's always risk, but especially on the macro side, we're now coming back to what we're talking about before, which is moving up market. We're selling right now a lot to fintechs. And I deeply believe in the future of these companies. But of course, Goldman Sachs or Bank of America, a little bit more stable than some seeds, Series A companies that just raised money in 2021, where it was quite easy to raise money. So I think that's also definitely one risk to our business, that the industry we're betting on is not growing as fast as we want them to grow. And by that, also our growth would be slowed down a bit. But that can be mitigated by diversifying your or our portfolio of customers as well. Yeah. We're starting to sell to more. Also, insurance has very different macro risks than banking in itself. And by being able that our software can be used and serves as the backbone for these risk teams, we're making use of that and going into insurance, and in banking, we're going up market. So that's a strategy for the moment to mitigate potential on the horizon there.
Yeah. And just thinking about also with not even just the underwriting, but making better business decisions or decisions overall. How could your technology, what do your technology say if SVB were to be able to use Taktile? Isn't it a technology that would have helped them steer in the right direction, or at least understand maybe some trends, some kind of greater understanding within the macro market? I'm curious to hear your opinion on that.
Yeah. I don't think that would have been a good use case for the platform. Why is that? Because it was not so much about them making individual underwriting decisions, automated underwriting decisions on their portfolio, but it also had a lot of effects of rising interest rates, their internal strategy to invest money from their deposit into long-term maturities. And let's say that specific SVB problem would not have been, let's say, one of the classical decision flows you see on Taktile. And it's normally about how do you onboard with a credit underwriting KYC policy? How do you onboard a customer? Make, with as much data as possible, harness the data, open banking, accounting, credit scores, put them together and make a very quantified decision. So I think as much as I love our software, we would not have been the one who would have saved SVB.
Yeah. And if everything goes well, what's the long-term vision for Taktile?
Yeah, I mean, long-term vision. So Taktile is helping risk teams to revolutionizing on how they harness data to make better decisions. And I think we deeply believe in the world being more and more run on automated decisions. But as where we stand right now, we know that business teams and risk teams, they're not actually able to run with that speed, and they're not able to build and iterate on their decision flows. And they're still very much reliant on guesswork, and they're reliant on engineering, but that is not the modern way on how you can actually approach data. So that's exactly what we want to solve. And if the world is going like into the direction that I'm thinking it's going, Taktile will be a success, and we'll actually growing into insurance companies in the future as much as possible.
Wow. It's so fascinating thinking about how things are changing, at least in our country and in the US, and how much more sophisticated these models will have to be to understand someone's ability to whether to pay back a loan or take on some type of risk with insurance and things like that. It's becoming more and more complicated, right? It's not so cut and dry anymore. It's not a lot of people having a W-2 employee, then they have some kind of credit score, they have some kind of long history with that you can really kind of track and graph. It's a lot of definitely, or I guess in your opinion, it's a lot more patchworking of different variables that were not being considered previously based on the kind of, you mentioned it with companies that leak, but I guess on the individual level, are there a lot more variables that banks and all these lenders are having to consider when building these models and when servicing their customers?
100%. And we'll soon announce one of our new products where we actually connect to the most advanced data aggregators and vendors in the world on open banking, on accounting data, on phone data, payroll data, on tax data, on the credit bureaus. And there is so much you said like patchwork. That's correct. I mean, like so many cool companies are trying to like get more data, and us being the operating system for decisions, where these decisions are actually being orchestrated in the end. The only thing which is missing is having all of them available directly. And that's what we're building at the moment. And we're going to announce that to the press in the next couple of weeks on who's like part of that alliance that we're building there. So it's exactly about that. It's not only about us helping to make better decisions. In the end, you need to have the variables, you need to have the data in order to come up with a good signal on whatever you want to actually predict.
Yeah. And how does being connected with the biggest data aggregates, is that, I'm curious, does that change how we have an understanding, and does that change behaviors between different countries and how they, I guess I'll stop there. How does behavior change between countries, and how will you be able to kind of notice common behaviors, having more data available, having more of an aggregate to be able to feed the machine and challenge these models? What are the changes, or what are the differences you see between countries, but also how is data going to help maybe key in some similarities that other countries can use between them?
Yeah. I think it just allows a lot more mobility, not only for individuals, but also for companies. So there's a very cool company called Nova Credit, and they actually translate the credit scores from countries like Mexico or Germany or Switzerland into, if someone wants to move to the US, into like a more standardized FICO Vantage score. So like they're doing a lot of work there on allowing mobility of individuals and being able to have access to financial data. That's one example. On the other hand, companies like Plaid or Ting or Codad, they're actually aggregating banking data, or they call it accounting data, which then allows companies to expand very quickly across different countries. If you're a neobank, you're like Revolut, now you want to launch in 10 new countries. Do you want to be the one building the connections, integrations to the accounting systems of each nation? No. Or do you just want to connect to Codad? And by being connected there, you get everything in one developer-friendly API, which is well structured, which is well documented. So a lot of these companies out there actually allow mobility, and by that kind of like homogenizing the the boundaries between countries for financial data.
It's incredible. Like this next section, I call my founder FAQ. So I'm going to go with some rapid fire questions at you, and then we'll see where we get if that's okay. The first question, I love to open it up. What's particularly hard about your job?
For me, I think the hardest thing for me is to zoom in and then zoom out again. Like I need to think about the 5-year vision, and if we're going to expand more into insurance or banking, and the next moment we have to like think about a very specific feature on the platform and how we're going to design that it's the most intuitive thing. I kind of like, I think that's very challenging. I love that personally, to be in a position that I can do that. But on the other hand, sometimes you go from one meeting to the other and you completely and words there.
Yeah. What's something as a founder you find yourself spending a lot of time on that you didn't expect to spend so much time on?
I think what I did not expect to spend so much time on is actually iterating on product market fit. I think when you go into a company, you think you write a business plan and then you build a product and it sells or it doesn't sell, but it's not that easy. Kind of like in Y Combinator, they don't talk about PMF. They talk about a degree of product market fit. And it can be low and it can be high and it can be very strong and it can be even stronger. And I definitely didn't expect us after where we are as a company, people raise that much money from the outside. It's an insanely successful business, but we're still spending so much time. Each day you have to get up and you have to think about what your customers actually love and how you can keep building that. So I think I didn't expect that to be such a continuous effort, even after these years.
Yeah. Did you always expect to be a founder, or was it something that you found yourself in and it kind of propelled yourself into?
I think I always wanted to build stuff. I think that always been clear since I was young. I wanted to build stuff, and I also like to push an endeavor forward and to win. And I think that's all we have in Taktile in our hands now. There's competition, but we're going forward, and that's definitely a motivation between me across the company. That motion of winning the market at the moment.
Yeah. And in particular, I would love to hear some predictions. What are some grand hypotheses that you have about the overall kind of financial system as you see it today? And then what are some hypotheses that were proven right, whether it was customers or yourself, whether it was early on or recently, that were surprising to you, that something that you did not expect, whether it was the use of Taktile or the predictions that it was going to make?
Yeah, I think that one hypothesis on financial markets are efficient in some way, but if you have more information than the others, and if you have like better ways onto evaluating data, you can actually make quite some money. Kind of like profitability within financial services is not driven by luck, but it's very much driven by data and by making better decisions. And I think that's one hypothesis which we can see every day on the platform, that this value is coming out of the data. That's the one. And I think on customers, we had the hypothesis that business stakeholders want to be completely enabled by good local environment. Not everyone can code. Not everyone is a Python programmer. Do people actually care? Or do they just want to put everything in Excel and send it to someone and let them do the work of implementing it? We thought that decision makers want to be empowered. And it looks like that they're highly enjoying being unblocked and being empowered by now. So I think that's why that were proven right from our perspective. Maybe one that we saw in 2020 that the world is being completely ruled by AI and machine learning. It's not only that. Our decision that in many cases it's very powerful, but many decision flows are a combination between a machine learning model and logic and heuristics and proxies. So it's not everything, not the whole world runs on ML in financial services. There was definitely one hypothesis when we actually started out building more a machine learning platform, and then clarified the value proposition to being a decisioning platform, which might consist of some ML, but it's also embedded into rule systems. So that's, I think we were quite wrong in the beginning, and it took some custom to figure that out.
Yeah. What makes it not able to standardize is that human behavior is so, and human kind of circuit tests are so different and intricate, or what in particular, why is it not allowed, not allowed, but why is it unable to rule over all decisions and kind of consider everything and run almost automatically without any interjection?
Yeah, I think because sometimes a rule is just enough. For as an example, if I don't want to give a credit card to someone who's younger than 18 years old, I just define that rule. Younger than 18, no credit card. I don't need a machine learning model to be fitted on 1,000 data points of students that are below 18 and defaulting on their credit card in order to make that judgment. I know that, and I want to make that business decision. So I would just want that rule to be implemented without any inaccuracy. It's a very accurate rule. And sometimes, that is sometimes just the answer. ML is very powerful, but it's just sometimes not necessary to make the effort to train models on data. Sometimes humans know very well what they want, and they just need some tools in order to implement that.
Yeah. I have a last few questions here. I love to ask this one because I love how founders extract information from the knowledge that they ingest, whether early in your career or now. What books or people have influenced you the most?
One book I highly enjoyed, it's called Winning by Tim Grover. He was the personal coach to Michael Jordan and Kobe Bryant. I used to be a pro athlete when I was younger, and I take a lot of energy out of sport analogies, and I think pro athletes have experienced very, very hard and enduring times. And that book it's a great assembly of the journey that MJ and Kobe actually went through, and they're just reading how hard they fought in order to win their championships. You can take so much out of that and apply that to our business. And I really, really enjoyed that, and then finding analogies for Taktile.
Yeah, I love that. And the last little bit, I like to make sure we didn't leave anything on the table. So if there any question I didn't ask you or anything that you wanted to speak on that you didn't get a chance to, anything come to mind?
Open topic, and not something I want to hold a speech on, but I think ChatGPT is really coming into the media. GPT-4 just got released a couple of weeks ago. And I think we have to find dialogue on what that technology is doing to financial services. So what are the use cases actually that are being positively impacted by that? Because in risk is not about being a little bit precise. It's about being as precise as possible. And we talked about having data sets, which are in many cases not public. The internet is public. So
sure,
ChatGPT, OpenAI can train their foundational models on that. But a lot of default data of banks and claims data of insurance companies is not public. So it's much harder for these foundational models to be precise for risk application. I think it's just important that people don't overestimate the power of these models to an industry which is not perfectly made for that. We do have some very interesting applications in mind, what you can do with it. And we keep you posted, Julian, on what we will release there in the future, but it's not on risk prediction. I wouldn't give that to GPT-4.
Yeah. It's always good to keep some kind of healthy skepticism with any new technology and kind of realize where its capability is versus how much you have to input in there and have to then analyze what it's giving back to you to really make sense of not only the information you're receiving, but if whatever information you requested was, in that sense, accurate to what you wanted to get out of it. But Mike, it's been such a pleasure. I know we're over time here, and it's been such a pleasure to chat about not only your experience as a founder, but also what you're working on at Taktile, and how honestly this intelligent decision-making based on data has really, really opened up. Rather than people think it limits anything or goes in one direction or another, it kind of opens up the space in a lot of different ways, not only giving, say, lenders access to different individuals that they can service or testing hypothesis. And so excited to see where this technology can expand and be a fan of where it will go. So last little bit is, where can we find you as a founder? Where can we find Taktile? Give us not only your websites, but your LinkedIn, your Twitter. Where can we for you and the company that you're running?
Julian, thank you so much for having me. It's been great fun. Everyone reach out to us on LinkedIn or on our website, taktile.com. If there are any questions, please send us a message, and I would love to continue the conversation I had today with Julian, with everyone out there with interest in our space.
Amazing. I hope you enjoyed yourself, Mike, and thank you so much for being on the podcast today.
Thank you.